Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. Happy New Year to all of you. In today's video we are looking at Apple. Apple is one of the companies that a lot of you have asked me recently to look at it because according to Zoya it is actually compliant. Some of the other companies like Microsoft and so on are questionable, but when it comes to Apple it is actually a quite basically this is actually compliant. So what we want to do today is I want to look at the fundamentals of the business first, okay? Then we will break down the actual revenue. I will tell you exactly what Zoya shows in their app, and then I'll give you my opinion, okay? Apple is one of the companies that I used to own in my portfolio for a long time ago. I think I sold it early 2000 and 2021. So this is one of the basically they are the biggest company, the companies basically in the S&P 500 or even in the world if you think about. So just to be transparent, I'm going to show you very quickly. So I sold, I used to have about 25 shares, I think. And the last time I sold, when was it? October of 2021. That's when I actually sold the company. And the reason I sold, I'll tell you in a second. So I made about £500 or whatever it was, £600 at the time. And then I took that money and invested in something else because I wasn't comfortable at the time holding that business. So let's have a look at the fundamentals of the business first in terms of basically how they make money and are they profitable and so on. And then I'm going to show you where they get that money from. So let's start with that first. So as you know, Apple, I'm sure you all know what this company does. Basically offers wide range of products, okay, including the iPhones, the iPads and PCs and smartwatches and all of that stuff. But it also offers, okay, a lot of services, and those services include the Apple Music, it includes iCloud, Apple Care, Apple TV Plus, Apple Arcade and Apple Card, as well as the Apple Play and loads of other products including Apple Book and so on. So that is basically the overview of the business side of it. We'll come back to this part here, the blue section that I've highlighted. We'll come back to that in a second. Obviously, this in the information technology sector. It currently trades $129 per share. It has come down quite a bit from, I think it was 160 as a one point. It has EPS of $6. Market cap is basically over $2 trillion, and it has a narrow economic moat. Some people always will say, why is this not a wide economic moat? Because their main products, it can't be replicated. And there are other companies that actually, like Samsung and so on, that actually do have a similar sort of products that are doing very well as well. They have a beta that's slightly above 1. Okay, so they're a bit volatile if you think about it. PE is 21 right now. And when we look at the sector, it's 24. PE of 21 seems okay for this company because it always trades higher than that. The forward PE is quite low, interestingly, okay, and price to free cash flow is 32, which is interesting as well. So when you look at from price to free cash flow here, it actually seems expensive under normal PE, but forward PE is slightly lower, so it'll be interesting to see why that is. Annual dividend yield, they have 0.71. Latest increase was 5%, and 5-year growth rate of just 8%. Dividend growth streak of 10 years, so they have increased that dividend for 10 years. Payout ratio only 15%, which is, so they have a massive room to improve that if they wanted to. Dividend safety 99%, and they have $111 billion in the bank right now. So that is a lot of cash. There's some companies are not even worth that much, let alone having that much cash. But the company is a 2 trillion company. They make a lot of money. Basically, that can be the service side of it, makes about 78 billion per year. So that's not a lot to this company. So profit margin 25%, operating margins of 30, return on equity 160, total return the last 10 years. If you had this business, including dividends and price appreciation, you would have made about 22%. Current ratio just below 1, okay, but they do have a lot of cash, so I wouldn't worry about it. So they have basically their assets they can liquidate in the next 12 months, okay, to cover their liabilities is slightly lower, okay, but they have a lot of cash, so I wouldn't worry too much about that. In terms of estimation for the next year, it's about 9% growth for the next year, and then 9% growth for the next 5 years as well each year. Currently, we're seeing it is $129 per share, fairly valued at the moment according to Simply. Wall Street. Just a little bit overvalued if you think about it. Fair valued $130 per share according to Morningstar. Okay, fair valued again, fairly valued. Target price for tip rank is 179, so it's slightly more bullish. Okay, tip rank is basically about 37%, 38% upside. According to Seeking Alpha, it's more or less the same as well, 172 and 32% of upside. According to Seeking Alpha, it is a buy. Okay, right. So that's just to kind of give you the business, the fundamentals of the business. That doesn't give you, by the way, everything. There's a lot more we can look at. Okay, because I don't want to increase this video any longer than it needs to be. So let's now have a look at basically from the Sharia compliance side of it. But before we do that, we just need to see how this company makes money, right? So they have different sectors. In fact, I'm going to go back here. Okay, so this is their latest earnings report. So the fourth quarter that they actually had in September. Okay, so if you look at this one here, I'll show you in a second. So 3 months ended, so that's the quarter, if you like. Okay, so they're comparing it September 2022 to September 2021, as well as the 12 months, so the whole year, September 2022 to September 2021. The one I'm interested in is the yearly one, because that's the one that gives us the overview, right? So this part here. So net sales by category. So these are the different categories. So they have the iPhones, which basically they make majority of their money. All right, $205 billion of their money in 2022. Okay, the year that just based in September, that ended in September, came from just iPhones. Okay, the MacBooks, okay, is about 40 billion. The iPads about almost $29 billion. Wearables and home accessories is about 41 billion. And then the service side of it came from basically was 78 billion. So the second biggest here is the services, and that is where I have a question mark, okay? Because the services include a lot of things, and I'll show you exactly what they include in a second. And this is the services, okay? The Apple Music, the iCloud, Apple Care, Apple TV Plus, and Apple Arcade, Apple Card, and so on. So the ones that I have a question mark is the Apple Music, the Apple TV Plus, as well as the Apple Arcade. Now, when you go to their website, okay, and you will see they are very happy to advertise, okay, all the shows and the things that they're doing. So the Apple TV Plus has now basically is one of their main priorities. And like we've seen so far, this company has a lot of cash. So they are putting a lot more cash into the Apple Music, Apple TV, because they realized Roku and Amazon has actually taken over from them. Well, have had that industry for a while now. So they want to get into that kind of show. So they are paying a lot of these high, basically celebrities to actually now come up with their own shows. So Apple TV is one of their main priorities going forward, right? Apple TV Plus. As well, the Apple Music has always been one of their main things, right? Now, my main concern, and one of the reasons I sold it at the time, it wasn't even the music. Mainly, it was the Apple TV Plus, because that was growing and they had a lot of new shows. And these shows include all sorts of things that are not Sharia compliant. Just the same way I don't invest in Amazon, I was a bit hesitant to invest in this company, right? Apple TV side of things. Then the Apple Card came up. So at the time, Apple Card wasn't actually huge, but it was growing thing. The revenue from the Apple Card was growing, okay? And just now, just this week, they have announced they're actually increasing this. So let me show you. And this is just an article that just came up not long ago. So they said this basically around June time. This wasn't actually something new, but it has basically confirmed my, not suspicion, but what I knew Apple will end up doing. So the Apple basically is turning your iPhones into fintech. And that means what the company is planning to do is take these companies, Affirm and PayPal, out of the picture. So according to this article here, so this is an article that was released just recently in the Motley Fool. And what it's basically saying is that Apple pushed deeper into the financial service business recently, and that could become the next big growth driver for the company's services segment. Now, the buy now, pay later thing is what worries me about this company. I'm not worried about it. I'll be honest with you. I'm not actually going to invest in Apple anytime soon unless things have changed, right? But the buy now, pay later situation is more like what the fintech companies are doing. So you buy something now, you pay in an installment if you want to, and they will charge you some sort of interest. And that's where the Sharia compliant bit comes to question, right? So if you are basically investing in a business who basically putting a lot more time and effort into getting into the buy now, pay later credit card situation, they already collect basically rates from Apple Pay, right? They already have, basically they're planning to have their own credit card. One of the things they basically trying to do is to have a digital wallet, meaning you no longer need to carry your own wallet. Everything you need will be on the Apple ecosystem, if you like. Okay, so you just need to have your Apple phone and you're good to go. So that side of things worries me a little bit, especially the fintech side of things, especially the buy now, pay later, the credit card situation, okay? And all of these articles that I have read basically talks about that, okay? They have said here, so if you look at this, Apple takes a tiny percentage of every Apple Pay transaction. So the more people using it, the better it is for Apple. So they've realized that there are other ways of making money in it, basically, instead of just selling actual products. And this company has a lot of money. They don't know what to do with it, and that's my worry. They're gonna end up basically tapping into that market. They've already started, okay? So if you look back again here, okay, what you see here is the breakdown of their revenue for the last 4 years. So the services section, this top part, is growing every single year. And that includes the music, that includes the TV, that includes the Apple Card and everything else. So that's my concern. That is my main concern. That's the reason I will not be investing in this company anytime soon because of that. If a lot of the money came from this side, which it is still, right? So 80%, 90% it came from, another maybe 5-10% came from the others, and they didn't have this. Even if the Apple TV was there, but it was just like a couple of million, couple of 1 billion, 2 billion kind of revenue kind of thing, right? I would be all right with it, and I would be also okay with it if the company was not putting a lot more money into it. So I have huge concern in terms of the service side of it, from 46 billion to right now 78 billion, and I'm 100% sure in the next couple of years you will see this growing to at least $100 billion, because when you look at their website and what they have done in terms of like advertisement, in terms of basically getting these huge celebrities to kind of come on and do these shows for them, I think that basically they're going to push that. They're going to push that side. They're going to push the music side. They're going to push the Apple wallet side of things, or the Apple Card side of things. And that is basically where I have a problem with the company. So let me finally show you one more thing. So according to Zoya, it is a Sharia compliant. As you can see, they say their revenue, there's absolutely nothing wrong with it. There's no questionable, there's non-compliant right now. Basically, there's 0.71 that is non-compliant. 99.29% of it is compliant from business side of it. From financial side of it, financial screening, so interest-bearing debt, they're basically almost non-existent, 5%. Which is absolutely fine if you think about this company. And interest-bearing securities is 2.0. So from Zoya's side of things, it seems absolutely fine. There's nothing wrong with it. But I promise you, they will have to look at it again and think about this, either making it questionable or non-compliant, because this is a huge revenue. This section, okay, this section is actually quite big. So again, we need to break it down maybe into what bit of that 78 billion comes from the music and the TV and the Apple Pay, and then look at the rest of them. But again, it's a risk, right? Because you also have the iCloud, okay, are they making a lot of money from there? Apple Care, okay, the arcades, okay, and then Apple, and then basically the Apple Books and all that stuff. But the ones that I'm worried about is the card, the TV, and the music, all of that entertainment side of things. And for that reason, I'm not investing in this company. I have sold my shares about a year ago or so, and I will not be buying any of it. Okay, so that's my opinion. Again, that's just my opinion. I'm just giving you what I think and what I've done in order to make my own decisions. What you want to do is entirely up to you. I don't want to influence you. I'm just trying to just show you why I have not invested in this business and why I sold it in the first place. Okay, so why I'm not going back into it. So yeah, that is it. I've got a couple of more videos coming up this weekend. I'm recording it today. Hopefully release the next couple of days, just regarding the portfolio and the dividends that we received this month. And then I've also got another video of, if you are interested in starting a dividend portfolio, you want to start from scratch a dividend portfolio in 2023, what companies you should look at and why you should look at these companies. So I've got that video coming up as well. If you can enjoy this kind of content, please give the videos a like. Have a wonderful day. Assalamu Alaikum.